A lot of political attention in recent years has been focused on reducing the deficit, which is the difference between what the government spends and what it receives. However, when thinking about higher education, this is not necessarily the appropriate measure to think about, and instead, focus should be on the long-run cost. Until tuition fees were introduced 20 years ago, much of the spending on higher education was in the form of teaching grants. When somebody went along to university, the government essentially sent along some money with them in the form of teaching grants. This money counted towards the deficit, but it also was equal to the long-run cost because the government didn't expect to get any of it back. Nowadays, essentially the same thing happens. The government still sends along some money with the student to the university. However, this is in the form of a tuition fee rather than a teaching grant, which means that the government is loaning that money to the student. Crucially, because this money is in loans rather than in grants, it does not count towards the deficit today. That's true even if the government expects to write off a large share of those loans. In practice, the government receives repayments from the student once they have graduated for 30 years while they're earning, at which point whatever's left is written off and added to the deficit. It's also added to the long-run cost. A good example of this in action is the 2015 removal of maintenance grants. Maintenance grants were transfers from government to students coming from poorer households to help them with their living costs while they're at university. Now, these grants were replaced entirely with loans, which meant that upfront government spending didn't really change. Now, the government expected to get about £300 million back in repayments on those loans. However, because the loans do not count towards the deficit while the grants did, this policy wipes off £2 billion from the deficit. In this example, about £1.7 billion would be added to the deficit 30 years later. But, and here's the twist, that's only true if the government holds on to the loans. In practice, the government is selling off large parts of the student loan book. When it does this, the losses on student loans never appear on the deficit. Now, all of this might sound like just some accounting rules, but in practice, when policy is focused heavily on reducing the deficit, this can have important implications for higher education policy.